Friends, welcome to Yadnya Investment Academy. Today we are going to discuss whether one should invest in an NFO, that is a new fund offering, or no. This video was prompted by a question from one of our viewers, Praveen Kurade. So let's get started. Now, a new fund offer is not like initial public offering in case of stocks. In case of an IPO, the company is going public for the first time before it gets listed on the stock market for everyday trade. In case of an IPO, it's like you buy a fish when it is very small, wait till it becomes humongous, and then sell to make profits. So here, the entire buying decision is based upon the growth prospects of the stock. But in case of an NFO, you initially giving money to the mutual fund to create a portfolio. The mutual fund manager, based upon the investment objective of the fund, creates an initial portfolio. And this portfolio, which is a collection of stocks, is never constant. It keeps changing based upon market conditions and what the manager senses about the market. The performance of the fund is entirely based upon manager's ability to run the fund, the process that is laid out to execute the entire functioning of the fund, and the investment objective of the fund, and not the NAV. In case of an NFO, you just feel that you're buying something cheap. But the gains you make in case of mutual funds are entirely dependent upon the difference between the NAV at the time of investment and at the time of redemption. Let us take an example to understand this better. Let us say there are two funds, Fund A and Fund B. You are investing 1,000 rupees in each of these funds. But in Fund A, you are investing in its NFO, and Fund B is an open-ended fund in which you can invest anytime. So when you invested in Fund B, your investment NAV was rupees 50, and in case of A, its NFO NAV or your investment NAV was rupees 10. So based upon the NAV and your investment amount, that is 1,000 rupees, 100 units of Fund A were allocated to you and 20 units of Fund B were allocated to you. Let us say the portfolio of both these funds was completely identical. So the gains you made on both these funds were also identical. So after some time, you redeemed your investments from both these funds. The redemption NAV in case of Fund A was rupees 11 and that in case of B was rupees 55. So your number of units multiplied by your redemption NAV, your redemption amount in both the cases was 1100 rupees. So your returns would be calculated as the difference between your investment and redemption NAV divided by your investment NAV. And in both the cases, the returns are 10% as the portfolio was completely identical. So your gains are not based upon your investment NAV, but the difference between the investment and redemption NAV. So in this case, it hardly matters whether you invest into Fund A or Fund B. But even then, new funds should be avoided as they have no track record to look at. So you would not know how the fund could perform when the market moves up or moves down. In case of already existing funds, you have a track record to look at, and then you can choose whether you want to invest into that particular fund or no. Since the fund is new funds would have a higher expense ratio, which is directly taken away from your profits. Certain mutual funds like closed-ended mutual funds are available only during the NFO. But you can watch our video on closed-ended versus open-ended funds to see how open-ended funds are better than closed-ended funds. Also, existing funds would have well laid out processes which have come into existence over a period of time. For example, a large cap fund might always invest not less than 80% into large caps. There might be situations where a slightly higher exposure to mid caps might seem tempting, but the mandate to keep not less than 80% of allocations to large caps keeps it away from mid cap volatility. The processes laid out thus make the fund not much dependent on the fund manager. And so, in older funds where the process is well laid out, you could see smooth transition of fund managers. So friends, hope the video has answered the question, should you invest in an NFO or no? Thanks for watching this one. Watch this space for more such topics. Until then, happy investing.